Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for January 5th, 2020. Hope everybody had a great new year and I hope everybody is having a great Sunday. Really excited for this next week. This is our first full week back in the markets, full week of calendar economic data being released and first full week of liquidity coming in. So to be prepared for this next week, hey, try out ForexAnalytix. It's only $1 for 10 days, but keep in mind that this week we will be releasing our beginning of year pricing specials for our premium product and also our light product. Actually, I don't believe we'll have a special on the light product, but on the premium product we will have we will run our annual specials. It's a big one. So if you want to try out ForexAnalytix before that comes out, do it now. Because once we release the New Year offer, which a lot of people wait for every year, once we release that, you will not be able to try ForexAnalytix for $1. You'll just be able to take advantage of the steep pricing that we offer, the steep discount pricing that we offer. So, remember, once you do that, also download the mobile app. Doesn't matter if you're using the premium product or the light product, you'll still have the mobile app, and make sure you download it and use it so you get ForexAnalytix at its fullest potential. Okay, so enough about that. Let's talk about this next week, and let me go ahead and move the data flash out of the way. Okay, so last week, pretty big event happened at the end of last week. We did have a decent FX response in the yen pairs, and if you guys are sleeping on a rock, you might have missed it, but I know a lot of people were really just enjoying their holidays, so you may have missed it. We had the situation was very high-ranking Iranian general was killed, and the U.S. held responsibility, and we saw a little bit of risk off, a little bit of risk aversion, but more importantly, we saw yen strength. And I know I sound like a broken record, but I'll say it again. The yen has outperformed based on, well, it's really diverging away from risk appetite, right? The yen has done really well despite stocks being near all-time highs. So when you saw a little bit of risk aversion, following the events in Iran, you saw the yen really strengthen at the end of the week. And that is not surprising to me, and it's not surprising, shouldn't be surprising to you if you've been listening to this webinar or listening to our daily face webinars. Right now, the question is, where are we going to go from here? Because I'll tell you, I don't know if I'd be chasing the dollar yen on the short side here. If you notice, we are nearing the 161% extension, and also, notice these spike lows back here from October, right here. We spiked into them, and we might get down to this below 108, but maybe 107.70. But I don't think I would be chasing the dollar yen down here, because over the weekend the situation in Iran, it really hasn't escalated, so you're probably going to see buyers come back in to the let me find the S&P here. This is an easier way to do it. There we go. You'll probably see buyers come back in here in the S&P, because we're not really selling off. Yes, we got a pin bar here that could be a hanging man, but while we're above 3,200 in the S&P, and like I said, I don't think the situation in the market really has escalated much. So you're probably going to see a little bit of buying coming into the beginning of this next week. What that should do is that should take the dollar yen back towards the 200-day moving average. So, if we get a bounce in the dollar yen back up towards the 200-day moving average, I think that would probably offer a better opportunity for people that are looking for, long yen or short dollar yen, or short yen pairs, is going to be some sort of bounce, because I don't think I'd be chasing it down here. Although I will state again, I think the yen is performing really, really well despite the rally that we're seeing in the stock market. While the stock market continues to rally, the yen is defying that strength of equity markets, and the yen is being strong. Now, some of you might ask, well, hey Blake, maybe the correlation is completely broke. I personally, I think the FX market is kind of sidelined and not really participating in this risk rally that we're seeing. And I think the FX market is ready to respond should there be a little bit of risk off. Now, in as far as equities go, I look at equities and I still think that 3,300, which is, by the way, if you don't know where that is, let me go ahead and draw it out for you so you can see it. Here's the S&P, right? So if you take, I want to say last year, but it's not last year. Well, I guess it was the end of or the beginning of 2019, but the very end of 2018, we sold off quite aggressively. All right, the 161% extension comes in, and you can see I have it highlighted up here at 33, 15, 16, 17, depending on how you drew your fibs. We're going to come right into that. I think we're going to come into that 161% extension. I'm more interested to see how the stock market, or the S&P rather, reacts when we get to 3,300 roughly, and then see how the yen reacts from there. And I do believe that the yen will strengthen once we get there. So again, I'll just reiterate: if you're looking for dollar yen shorts, I don't know if I'd be chasing them down here. What I'd rather do is wait for some sort of bounce. Now, a few other things that I've been paying pretty close attention to. First and foremost is the Aussie. The Aussie has come off a little bit, and you can see the Aussie dollar had come off some resistance. We were coming into some channel support and really a lot of previous resistance, which should act as current support down here in the Aussie. If you have the argument that that we are going to continue to rally in equities and globally, economic data is going to improve. We're going to see, the U.S.-China situation continue to the trade war continue to ease, and economic data is going to improve from here. Then my 2 cents is that the Aussie is probably at levels that you want to be looking to buy it. I mean, these are going to be levels, and we discussed this last week, and that's why you can see this line, this little arrow down here. I was looking for a dip down towards 69.25 ish, and we're there. We really tested it on Friday, and we might get a little bit lower than that, but I think there's a lot of confluence of support right through here if you want to pick up the Aussie on the long side. The flip side of that is if you're in the camp that the economic data globally had already been slowing ahead of the events of the end of December, the trade wars and USMCA and everything else, and you think that things are going to continue to worsen from here, then the Aussie is probably the currency pair you want to look at for a possible short on a breakdown. Okay, so I think just to sum it up for you guys, I think the Aussie is in a very, very, very pivotal level and area for the pair. So I think if the bull case is going to work out, we're going to bounce from 69 or around the 200-day moving average. But really, if we get below that, I would be very skeptical about being long the Aussie dollar. All right, so also keep in mind that we're at a 50% retracement of the 2018 November 2018 highs to the recent lows. It's also a 50% retracement of the pair. We hit 161% extension of this move. You guys might see I'm drawing some conclusions about some harmonic patterns that are developing, but I won't go into that today. But like I said, I think where we're currently at is an actionable area for both longs and shorts. It is an area where you can look to pivot for possible longs. I think your risk reward is much favorable down here. The flip side is if you're a bear and you're overall just bearish and maybe dollar bullish, you might be looking for a breakdown. If we get much further lower. Okay, so this is a really important area for the Aussie, I guess, is what I'm trying to point out. Also this week, keep in mind in Australia, we have trade surplus at the end of the week, and we also have retail sales at the end of the week. So, and then China inflation data as well. So there are a few things that might move the needle on the Aussie dollar. Speaking of this week, this is a pretty big week for U.S. data. We have the jobs report, U.S. jobs report. We have the Canadian jobs report as well. And remember, last month we had a really big, a big beat on non-farm payrolls, and I think we're going to revert back to the mean a little bit. I think the market's looking for about 160,000 jobs to be created, and we saw the ISM come in at the end of last week, and it was pretty weak. So we're going to be watching the ISM services data this week, which is also going to be very important. And people are going to start drawing some conclusions, after they see ADP on Wednesday. But when you're talking about the dollar, I think the euro is coming into some very interesting levels. Now, keep in mind that the euro dollar is above the 200-day moving average, and we closed above the 200-day moving average. Actually, I need to show you something on how I'm drawing the charts. Remember, my team and I, we all do updates on ForexAnalytix over the weekend. I don't do the weekend updates. My partner Steve does, and so I want to, him and his charts and my charts look a little bit different. But throughout the course of the week, you'll see my charts as I do all the end of day updates, plus a lot of the intraday updates as well. But notice how the euro has come down to the 200-day moving average and also channel support. I think the euro is going to have a lot of support, and also the 618 retracement, which comes in at 111.30. If you were listening to the Face webinar on Friday or maybe Thursday, and also the daily roundup, which I'll talk about here in a moment, I'd been explaining to you guys Thursday, Friday, I was going to be picking up the euro as we dip towards the 200-day moving average, towards the 111.30-40 level, and I did buy it, got in and out, took advantage of this bounce. We did set up a pin bar, which is neutral, but it could lead to a rally. What I'm trying to point out here is I believe that the euro is coming into a lot of support, and I think that you're going to see support on dips towards 111.20. This is, like I said, it's a minor channel support. The 200-day moving average is here. The 618 fib is the Fibonacci level is right here. So don't get too carried away on thinking that this is a bearish, false, is a false upside breakout and it's turned bearish. I'm not really sure I'm in that camp. I actually think that the euro dollar has been building a nice base. All right, and so I think we could dip towards 111.20, and we could go further than that, obviously, but I think that's going to be more data related at the end of the week. It's going to be more determined on how non-farm payroll comes out. But I am still looking to buy dips down towards 111 and change. So that has not changed, and I think that'll be the case going into this next week. We might be able to see that a little bit. All right, I'm not going to. Well, let me talk about just a couple other things before I let you go. As far as data goes this week, we do have, like I said, it's a non-farm payroll week. We have ISM services data coming out. We have ADP numbers. If you have some Swedish krona exposure, some krona exposure, and I trade the Swedish crown sometimes, but I don't have any exposure at this moment. There's the Riksbank meeting minutes are coming out this week. We have some German industrial production numbers at the end of the towards the end of the week. We have also some CPI data from the eurozone, so that might be a mover for the euro, and obviously there's a lot of different pairs that you might want to be paying attention to this week, which I'll go into in more greater detail during our Face webinar. Now, I do want to talk about the daily roundup webinar, which is at 12:30 Eastern every day. 12:30 Eastern, near noon. So depending on where you're at, 12:30 Eastern, Monday through Thursday. Paul Franco used to host the daily webinar. I'm going to be doing it for probably the next quarter or so, and so therefore you'll hear me on the face webinar. Then you'll hear me a few hours later talking about, hey, this is what happened. This is what I'm looking for going into Asia. So make sure you tune into those. They are free. They're free to listen in. And the daily roundup webinar is only 10 or 15 minutes. I keep it really short and sweet, but kind of recap and tell you what I'm looking for going into the Asian trade. So make sure you're listening in there. And guys and gals, remember, if you're watching via YouTube, give us a thumbs up. Tell us, hey, I like this video, and that urges our team to continue to produce these for you. We really, like that. It helps us out a lot. And also subscribe to our channel, so this way you don't miss any of our recordings that we post, because if you happen to miss the face webinar, you happen to miss the daily roundup, and you want to go back and listen, if you subscribe to our channel, you get notified via your mobile device if you have that notifications turned on or on your desktop. So guys and gals, busy week, exciting week. Remember, we have our annual special coming this week for those of you that want to take advantage of being part of the ForexAnalytix family, so you don't want to miss that. My name is Blake Morrow. I'll see you tomorrow morning on the face webinar. I hope you guys enjoy the rest of your Sunday, and Happy New Year.